welcome to another episode of Smile Podcast today with Jove Tapiador. Jove is the president of Rural Bank of Silay City and, more importantly, the co-founder of GoodTech. Welcome, Jove, today to the Smile Podcast. It's great to have you. We've been talking for a long time. We have been together on several roundtable discussions and all sorts of other conventions that are in the fintech space in the Philippines. And it's a great honor to have you today on the podcast. I'm really looking forward to this one. Maybe let's just start with a quick intro. Tell us a little bit about yourself and your role at GoodTech.
Thanks, Jerome. Happy to be here and glad that you're hosting this podcast. I'm sure there's a lot of people listening and learning from your podcast. So my background, you mentioned already that I am the president of Rural Bank of Silay City, which is a rural bank out here in Negros, and co-founder of GoodTech, which is our fintech company as well. My background is really more about this combination of finance and technology. I've worked with USAID funded projects on microfinance and electronic payments, supporting the central bank. And this has brought me to a point where perhaps we should put 1 + 1 together to create 5, right? So when you combine finance and technology, you leverage that, you reach more people, there's greater impact out the country. And that's the reason why I co-founded GoodTech, a fintech company, to support the development of financial technologies in the community banking space that creates such an impact.
Great. I love it. So when we go to your website, we actually see there's a lot out there. There's GoodTech, GoodBank, Good Loans, GoodPay, and I can summarize everything as good so far. How did you come up with the name? And we are similar with Smile, but is there perhaps a philosophy behind it? Why do you call it good? And what's the intention behind it?
Right. Well, I subscribe to the phrase, to do good, you should do well, and to do well, you should do good. And that, in a nutshell, is why we decided to use the term good, because it connotes something positive, something easy on the ears, pleasing to the ears, but also a means of demonstrating intention that we should do good for others. And it's not just about, making profits, although that's important. It's creating impact, and that creates meaning, not just money, but meaning. And as a founder, as a co-founder, and I would say even among our employees, it creates that kind of motivation to do better, because there's more to our calling than just earning a profit. And therefore, we attach the good in various words, like technology is one. We're supporting the banking space, so attaching good to the bank, creating a differentiation that we are unique. And the same also with loans, with payments. So it's that, and it's catchy. So it creates that kind of meaning and catchiness that makes it attractive for us, and it motivates us to do better.
Great. I was interested as well to understand, are these just different brand names, or do you have actual departments within your organization that are separated? So you basically have a team that just focuses on loans and another team that focuses on payments, or are these brands only in this one team that takes care of everything?
GoodTech subscribes to the idea of fintech as a service. We provide banking support. We are not a bank. GoodTech is not a bank. But we provide the technology platform for the banks, and in this case, the Rural Bank of Silay City as our model. And then there's a platform for loans. There's a platform for payment solutions. So we are OPS. We are an operator for a payment system, and so we also provide those kinds of systems to institutions. We are not a lending company, but our solution is being used by financial institutions. So there are teams that are focused on each category of solutions, banking services, loan support, or loan platforms, and payment solutions.
Great. I just had to do this one follow-up question, but I wanted to go back to the initial purpose that you mentioned. Why is it called Good Bank or Good Pay? I love the mission statement, especially since there's a lot to do, especially in the rural areas of the Philippines. I mean, everybody who has been there understands how first such a beautiful country it is, but at the second time also that there's just so much still to do in terms of infrastructure. On your website, you have the subtitle Rural Bank Turnaround Artist, and that was, I just had such a blast reading through all of these descriptions, because I can only imagine as an ex-bank consultant what kind of challenges you must be facing when you take on a task like this. Can you tell us a little bit more about these unique challenges that come with rural banks and your quest for digitization?
Yeah, there's a lot of war stories here, Jerome. But I would say that, just give you a simple figure. Back in the year 2000, there were over 1,500 rural banks in the Philippines. 2023, we only have less than 400 viable rural banks, 60% of which are undercapitalized and may not be able to scale. So we're actually seeing the shrinking of the rural banking industry, and what remains are probably the more stronger players. What are the challenges here? Challenge is, number one, their markets have changed. What used to be, a one branch rural bank in a far-flung community, and they're the only bank there, that has gone out the window. We now see thrift banks, universal banks in second, third class municipalities, for example, where rural banks formerly reigned supreme, and now they're losing their market to them. Second is that the evolution of the market has been, for the past decades, have been slow in change, but the past 20 years, there's been a significant change. Why? One, there's a younger set of the population who are more tech savvy, who would like convenience, who would like digital products and services. And rural banks are having a hard time coping with these new generation of potential customers. So they stick to their original market. And these are normally I'm sorry to say, but they normally stick to those who were born in the 50s, 60s, 70s, maybe 80s. But the new generation, they have probably mostly missed out. And therefore, the biggest challenge is really the mindset of the owners to adopt change, particularly technological change. And second, to look into new markets that patronize those kinds of digitalized products and services. The third challenge, as you pointed out, is infrastructure. But I think with a high level of mobile penetration, that can be addressed. And we already have more than 100% mobile penetration. Internet penetration is over 60%. A lot of Filipinos already have a Facebook account or Messenger account, or participating in the e-commerce sites. So it is this combination of factors that lead to unique challenges in the rural banking sector, and as a result, most of them cannot cope.
It's highly interesting. There's a saying that basically states that people generally don't change, and I think that holds true to a certain extent. And it would probably certainly hold true for a lot of traditional bank CEOs or CEOs in general. Not to put anybody on the spot. So my assumption would be those that have a younger generation of leaders in their rural bank C-suite are those that are more susceptible to new ideas and come up with new technologies. Is that the case? And if so, what are the first products that you would pitch previous to your engagement? When you say rural bank turnaround artists, I would say, like, what are the first things that are for a new generation leader of a rural bank? What's to address, and how is it done?
Okay, let's unpack that question, Jerome. So first, a mindset of the, let's say, the more traditional bankers. And that's true whether you're a universal bank or a rural bank. I've talked in particular to the president and CEO of a top 5 universal bank. His answer, we will continue to open branches. Why? Because that is their key to success. And so they continue to open branches. They recognize, of course, technology is important, but they believe that the branch-centric strategy is still profitable and viable. He may be correct at some point, but as the next generation of customers emerge, those branches might become irrelevant and inconvenient. And that's the reason there, even among the top 10 banks, there are upstarts who are trying to change the status quo through digitalization. So we are at this point where the answers are still, there's still tension whether this strategy of continued branch expansion remains viable or we go through a fully digital route and close down our branches. Might be a combination of both depending on the market and depending on the location. But when you mentioned, if I were to pitch that to a new generation of leaders, I would say that let's take a look at the market first. What are their requirements? What are their needs? And where they are evolving towards. And my thesis, my hypothesis, and this has been borne out with facts, that the population is moving towards a more digital, more digital-centric type of financial products and services. So if you want to turn around your bank, if you want to be the market leader, you have to go outside an asset-intensive and branch-heavy strategy and move towards a more digital strategy that is asset-light, that is customer-centric, and that will address their day-to-day requirements in a convenient and safe manner.
Very interesting. There's one question that I would have that is probably a little bit more towards your business at the moment, and how do you actually differentiate when what you just mentioned, when you apply this to GoodBank, Good Loans, and your whole product range? How do you address this as a CEO, as a president, and as a leader in your organization? What are the concrete steps that you guys are taking? Probably also maybe, if you could, or if you're free, what are the the conflicts that you guys are facing when you try to go and follow this kind of new path?
Right. So we're mission-driven, Jerome. Just because we have the same set of toolkits as any other fintech player, we've got payments, we've got loan solutions, we've got banking solutions, it doesn't mean that we're following the same markets. In our case, we're targeting 4 key market segments. Number 1, OFWs. So we've got Filipino workers abroad. Second are micro and small entrepreneurs. Third are gig workers. Fourth are farmers. And each one has unique requirements, but they are interrelated. What's that? Why? How are they interrelated? Majority of them actually are in the rural areas. And so going to the rural areas is key. Going outside Manila is key. There you will discover a new set of challenges that are unknown or, are ignored upon by fintech players mostly based in Manila. A very good example would be data. Where do we get it? How do we get data? People are saying about, okay, let's use alternative data from the telcos. Fine. But then that's, for me, that's only a limited set that determines behavior, for example, for lending out. We need more. And what we're doing is actually to go out in the field, do pilots, learn from those pilots, and create the systems and code them in such a way that they are unique for those market segments. So we are accumulating data. We are customizing our approach to those market segments to come up with better product market fit. And that sets us unique from purely focused on fintechs that are focused on the urban areas or Metro Manila. So this kind of nuance, this kind of know-how is something that's unique for us.
Very interesting. Cool. So I think a lot of the startups that we interview here, and also for ourselves, one of the I would say guidelines is how do you hack growth? And I think it's pretty much what you just said goes in this direction. And so specifically, first identify your customer group, OFWs and gig workers and farmers, etc. So these are all specific customer groups. What is your goal? What is your, so to say, or to say in this, there's this book, Growth Hacking from Sean Ellis, that I think every startup founder has read. So to stay in that lingo, what is your North Star metric? What is your goal that you would like to achieve? Or if you have one OKR goal for the end of the year, what is it? What do you maximize for?
Right. Now, this is not the end of year goal, but what we're saying is our North Star is really to have impact to 5 million Filipino households throughout the country. Why 5 million? Because that's the number where we've got the most in underbanked, unbanked in rural areas. And that's so 5 million families, 5 times 5 in an average household, 5 persons in an average household, that's 25 million Filipinos. That's a little under a quarter of the Philippines. So that's our North Star. But to reach that underbanked, unbanked, you need to go down in the field, get your hands dirty, learn from them as you implement and pilot projects and solutions. And that's why I'm actually here in Bacolod. I'm here in Negros because this is our lab. This is where we make things happen, and this is how we learn as we scale.
Absolutely love it. Be close to the customer. I think that's rule number 1 for product-driven leaders. Can you tell me, since we're talking about product already and being close to the customer, there are banks that start with a traditional approach. First, take some deposits, perhaps attract customers with a high interest rate, and then transition into secondary products such as, in the city, perhaps credit cards and then loans or, partnerships, etc. What is your product agenda? What is the first thing that you need to get right? And how do you want to scale from there?
Right. It's a tough challenge. We would like to have deposits or savings as our priority, because this is where they open up an account. They are able to use either traditional over-the-counter services or digital channels. But since we're in the Philippines, the hook is actually loans, and we have to get it right. It's easy to get to open an account, but it's tough to determine whether this person is creditworthy or not. So our first go-to market product is actually a loan solution for the rural bank, so that the rural bank will be able to market loans in a digital channel using digital means and onboard them in such a way that you're also using digital tools. You don't need a pen and paper to do that. Your eKYC is more electronic. And that for us is, I think, the necessary first step.
So it's essentially enabling rural banks to have a wider infrastructure to better serve their customers with a technology. That's probably good.
Right.
Yeah, great strategy. I know you're one of the rural bankers that actually run the company more like a startup. Can you perhaps want to shift gears with this question a little bit? Can you maybe tell us a little bit about the daily routine that you have compared to, like corporate or old school bankers?
Yeah. Okay.
I'm sure you have seen a lot of those.
Definitely. So, in a traditional banker, you wake up, you go there by 9, you're in the office by 9, you address all these concerns on the operations, on marketing, on regulations, and you're out by 5, 6, 7. For commercial banks, they might extend a little bit, like they can work up to 8 o'clock in the evening. I know for some, like the big multinationals, their banking hours, since they have a regional operation, they go as late as 9 in the evening. And they do that Mondays to Fridays. In our case, it's a bit unique. So like a startup, it's actually, we work even on weekends, unfortunately. And the reason is that we subscribe to the idea that you need to iterate fast. So what's unique is on a daily basis, it's not just maintaining the status quo or servicing the business as usual, but it's actually looking for ways to improve our process, our product, our people. So this continuous mindset of continuous improvement is what we bring to the table every day. And we're not limited to the confines of the office. We encourage work from home. And that's because we were born out of the pandemic. You know, when we started this in 2020, 2021, it was always been that way. We working from home, using the digital tools at hand to connect, to create, and to open opportunities, and only go face to face when you really need to close a deal. When the other side would say, okay, we're good to go, or we would like to establish the kind of relationship, a trusting relationship that is required for this kind of banking service. So I guess that's the difference. Whereas traditional bankers would look at this from a punch in, punch out. We work 24/7. We start digital first. We learn from this as we go along. We do the maintenance stuff for what is required for a bank, but also we innovate incrementally in many ways across people, product, and process.
Have you seen different rates of adoption? When we're talking about the way that you work, it immediately makes me think about, okay, this must reflect in how customers pick up your product. And since you mentioned the OFWs and the gig workers and the farmers, etc., these in and of itself, although all underserved and all basically in rural areas, they're still very different customers. I would be super interested to see which of these groups are the fastest to adopt your new way of providing banking solutions.
Right. So among the four groups so far, the ones that are more adaptive are the OFWs, generally because they have already been exposed to digital products and channels.
Yeah. No access to the branches.
Right. So they're the first ones, to be honest. But then we've got the gig workers who are already doing they're a driver for let's say for app, for Angkas, for Grab, for all those delivery stuff, which was highlighted during the pandemic. They are also the second one that are easier to adapt onto our offerings. And they understand intuitively that we engage them through digital channels, and it's not hard for them to transition. The more challenging ones are those that are location-based, or have stores, like micro entrepreneurs, or normally do not have quick access to the internet, or out in the field, like the farmers. So that takes time. They're still, especially in the rural areas, there's still a need to establish trust, and trust comes through that face-to-face, pressing the flesh kind of introduction. However, having said that, we are also penetrating social media channels, which is our entryway for these markets, because now they're used to social media. Then it's easier for them to be aware that we are here and we are here to serve. And it may come first as a face-to-face, but gradually we would like to transition them also to digital channels.
So that's interesting. Since you provide technical solutions for rural banks to better address their customers, you also provide a marketing strategy, or you provide the go-to-market strategy for your own products, or do you provide them to the rural banks? Or do you do both?
We do both. We provide both the tech platform and the go-to-market platforms or strategies. And the challenge of rural banks is they do not have the capacity, generally speaking, to execute on a digital marketing approaches. And so we provide that as a service. We open up markets, we direct them to the bank, and that's how they are able to capture these new market segments. Now, it requires also some sort of organizational transformation on the bank side, and that takes time. So to prove that our solution and our marketing approach works, we do it with the rural bank, and then they learn. So it's learning by doing and gradually building up the capacity such that they are able to do it themselves.
Man, that sounds like a lot of work. I really can understand. the title "Turnaround Artist" really seems like a really valuable job to do there. Another thing that I wanted to check in, and I think that's probably where the relationship with Smile comes. What we see, probably unlike markets like in the US or in Europe, where there is a solid data infrastructure and where you have credit scores and this kind of information ready at hand. Can you tell me a little bit of the challenge that you face? You're looking at your segments and the accessibility of data.
Right. So we do have credit bureaus, and particularly the Credit Information Corporation. So we have access to, of course, the negative and positive data files, but that only covers, my estimate would only cover around 20-30% of the population. And those are mostly the banked already. And the challenge is how to capture the other 60-70%, right? There are a couple of ways. One is, no going about it, but you talk to those with existing data, maybe the telcos, maybe the retailers. But then when you start creating that credit scoring model, it becomes a challenge because there are social, let me be precise, we have a more holistic approach to credit scoring. It's not just about financial information, which we can get from, say, other financial institutions, but it's also about behavioral types of information to determine credit worthiness, especially for the underbanked unbanked. And the amounts are so small that you cannot impose collaterals, right? So it's really about character and cash flow. The cash flow side, fine. We can determine that, we can estimate that based on the business, based on available information. But the character side, that's critical. And normally, in a traditional setting, you send out a credit investigator, you poke around the community, investigate the background of this borrower. But if you want to scale, that is not scalable. And so we have to look for alternative social data, not necessarily Facebook, not necessarily social media, but among their circles of friends. And that's what we're still figuring out, how to come up with that kind of behavioral data to have a better credit scoring model.
Absolutely. Sounds like a very, very challenging endeavor. And also I can only begin to imagine the expense that it has in a traditional way to essentially get social data from a face-to-face interview, also in a digital way, right? When we're talking about assets and asset-light operations, I would imagine that this is quite challenging. But super excited to see what your technology is going to bring there in the future. Talking about challenges in general, I also wanted to ask you what you think are the biggest challenges generally overall, talking about the financial industry. What is the financial industry's biggest challenge from your point of view when we're talking about, perhaps specifically about the rural banks? I mean, we talked probably a lot about them already, or some of the challenges were already faced. But overall, if you could change one thing to overcome the one challenge that you have in mind, what would it be?
Right. Uh, it's more about people, Jerome, to be honest. It's not about tech. It's not about capital. The market is there. There's available capital. Regulations are there. It's really about people. And what, to be more specific, it's really about leadership in the rural banking sector. So I'm not painting everyone black here. I'm just saying here that leadership is crucial. And if you were to change to survive, to thrive, then there's a need for a change in the leadership mindset. And if not the leadership mindset, then at least the introduction of next generation leaders who understand the sea change that is happening right now in the market, in the financial environment, I would even say in the environmental side of things, especially if your market is mostly in agriculture. So that's the one crucial thing I would say is a challenge. Having innovative, imaginative leadership that would address the challenges of the banking industry, or the rural banking industry in particular.
Yeah, very interesting. Can you maybe give one example where you have been, very desperate, or you don't have to call anybody out by name or something, but maybe give the audience a little bit of an idea of what it means to face such a challenge, and where you perhaps spend a lot of time to convince somebody or try to reach a consensus with somebody to no particular outcome. And how did you change your strategy after an experience like this?
Right. Maybe a good example is where I went wrong, right? So even prior to the pandemic, I was asked to support and lead the marketing of a thrift bank, which is located in the province, similar to a rural bank in size and in market. So what went wrong there? What went wrong was we followed a traditional lending methodology that focused on going to market, using credit investigators and people, and managing and scaling in such a way that we have to build an organization of dozens of loan officers, supervisors, credit investigators, collectors, the entire thing. We were not able to turn that around significantly. We were able to change products. We were able to change procedures, processes. We were able to collect in some meaningful way. But then in the scaling aspect, I think that's where we face the challenge. And we had to step back and review how to overcome that. And back then, I would say upper management was still skeptical. So they simply continued what they did before. And that's the tried and true sending out people. We proposed, of course, some level of digitalization, but they would like to go in a very careful manner, in a controlled manner, in a pilot, which is fine, but then it just took too long. So at the end of the day, we realized that this won't work out, and we had to part ways. The lesson learned, again, is the openness of the team, the decision makers, to embrace something unknown, which for them is, say, digitalized products, channels, and services. But second, it's really about iterating in a way that's faster and more upbeat and up-tempo, similar to what a startup should do, right? So learn from your mistakes. But then, you see, from a banker's perspective, mistakes is a finding. It's an audit finding. It's potentially a regulatory landmine where there's none. So that's what's holding back, I would say, that kind of bank. And that's true for many banks even today, that they are unsure whether the solution will work. How will it impact their capital? Will regulators frown upon them if there is actually an error that happened that significantly increases the credit risk or the reputational risk of a bank. So this kind of balancing act will have to be broken by bolder leaders that understand risk, but also how to mitigate and manage risk in such a way to create opportunities.
Very interesting. Now, considering that there are 6 licenses for digital challenger banks that have come out in the last couple of years that are under, immense, I would say, scrutiny by the BSP, and there's a lot of pressure to make this a success. Would you say that, for instance, for the rural bank, there is a little bit less scrutiny and you have more space to iterate and to experiment, perhaps?
Yes. Straight answer, Jerome, yes. And that's the reason why we have to rural banks have to take this opportunity to iterate, to improve, to learn, to pilot, to experiment, as long as their capital allows it. Rural banks individually, rural banks are nothing. They're very small compared to the total banking industry. They've been around for decades. They have the respect of the community. They have low-cost sources of funds that can be leveraged for lending to certain market segments that they desire. But what is lacking? What is lacking is the innovation needed to break out of that old model, to create new products and services using the latest tech. And in the rural banking space, you have that opportunity because you are not a systemically important player, unlike the top 5 commercial universal banks, where one sneeze might create a ripple across the entire financial ecosystem. So, in a way, being small gives you an advantage so that you learn, innovate, grow, and thrive. So that actually is a blessing in a way.
Yeah, I see every segment of different banks, whether it's a challenger bank or a commercial bank or a rural bank, they all come with different sets of benefits, but also with challenges that every CEO has to tackle themselves. It's an interesting set of topics, and I would imagine the grass is always greener on the other side. Once you are in one segment, you would like to have the problems of the other segment. But that's interesting. Talking about the other digital banks that are out there, specifically more targeting perhaps a more a population that is perhaps more centered in the cities. How do you think about the outlook for the digital banks, and what would you like to see as a prequel, perhaps, for what is going to happen with the rural banks, and how is it going to affect your business? So basically 2 questions in terms of outlook.
Sure. Digital banks have created the condition from which the central bank, the BSP, is now willing to embrace more digitalization, even in the rural banking sector. Why do I say that? Because of the digital banks, and kudos to them, they are pushing the boundaries from which the regulators will be able to accept more risk, especially in IT risk, right? Information technology risk, which creates the kind of, what's the right term, opening for rural banks to utilize. So we think that the digital banks will eventually find the right product market fit, depending on the conditions that they operate in. So let's say mostly, as you've said, mostly in the urban areas. And if they do reach out to outside the urban areas, then they will face a new set of challenges, which then creates opportunities as well for them to innovate, and from which rural banks can follow as an example. So I think they will continue to grow. They will continue to innovate. They will still remain challengers to the traditional big banks, and which the rural banks can capitalize on. So for the rural banks, we know that the industry is shrinking. We only have less than 400 rural banks, and they continue to shrink. but it also opens up opportunities for them to enter markets where rural banks are closing. But they can enter only those if they have the right organization and technology platform to go outside their hometowns and home provinces. And so my view for the rural banking industry is there will be fewer, but they will be stronger. And we think that there still remains a niche market for rural banks in general.
So consolidation in this market. If we take the three main segments that we can observe in the Philippines, perhaps to just simply categorize them as the challenger banks or the digital banks, then the traditional big groups, and then the rural banks. The move that every of this group has to make or will make in the next couple of years are probably quite significant for all of them. Everybody has to change. Digitization puts some pressure on them, and basically the market is asking for new products. From your point of view, which of these three groups has to make the biggest change, and where will be the biggest challenge? And what is your outlook, let's say 10 years from now? Will the big banks come up with a lot of their own digitized solution? Will they find product market fit? Will they adapt better? Will it be a small number of rural banks, or will even the digital banks make the race?
Right. I think the biggest change will have to come from traditional banks. So, they control more than 90% of the country's financial assets. So they're pretty much comfortable where they are. They have the corporate accounts. They earn the big bucks. They have the brand and the reach. So, but then that also means that their market is not really retail. It's really more corporate, more mid-sized corporate merchants. And this creates opportunities for challenger banks and rural banks to capitalize on. So traditional banks may be comfortable to become the corporate banks and investment banks that the top 1,000 or 2,000 corporations rely on. Fine, that's our problem. They can have their own set of challenges. They can have their own set of more digital products and services for that market. But if they want to penetrate and continue to serve the mass market, then they have to think like a challenger bank. And this is where the challenger banks are actually ahead, because they're thinking customer-centric. They're thinking retail. They're thinking product market fit on the get-go and iterating and experimenting on that. So there's still opportunity for them to grow, to take market share away from traditional banks. But where does the rural banks come in? Or where do they fit in? They can be a digital player in the rural communities where more than around half of the population reside in. And so, even if the sector is shrinking in terms of number of banks, this creates also an opening to learn from the challenger banks, incorporate best practices, and expand nationwide. It's the classical strategy of dominating the rural areas before you penetrating the urban areas. So you have dominance there, and you could easily penetrate the urban areas. I mean, where does most of Metro Manila citizens, people come from? They do have roots in the provinces, right?
Exactly. It's the migration that we have observed in so many other countries in the developing parts of the world in the last couple of decades, where we actually went from a globally very rural world and up to over 50% in the last couple of decades. I think one of the best examples for that would be China. It's interesting to observe, talking about population in general, The Philippines is one of the youngest countries in the world, and it is also one of the biggest assets, in my opinion, that the country has to offer. And therefore, to not focus on the retail opportunity would probably be a big mistake in every strategy that a bank would have to have for the next couple of years and even decades. What is your particular take in terms of outlook and in terms of, perhaps to zoom out in a macro economic perspective, where are we going to be and what are the services, perhaps 5 to 10 years from now, that even a rural citizen would be expecting from his or her bank?
Good point. E-commerce and the business process outsourcing industries are key drivers of economic change in the rural areas. Why do I say that? Traditionally, rural areas are reliant on agriculture, reliant on light food processing industries, and that's it. So their ideal is actually to work not just in the farm, but actually in government, right? City hall, or work in a national government agency, in the police, become a teacher. So those are the kinds of ideal jobs back then in a rural area. But with the advent of e-commerce and the BPO industry, BPOs locating in second-tier, third-tier urban cities creates opportunities for the younger generation to experience employment opportunities outside those traditional settings. E-commerce also creates micro-entrepreneurs. Now you have online sellers. Even here, I'm here in Negros. Interesting thing, I went to a small hole-in-the-wall restaurant. Where do they get most of their orders? Via Grab, via Food Panda.
It's amazing.
And you see that happening across the country. So it creates new revenue streams, creates new micro-entrepreneurs using those kinds of, they're not sophisticated digital platforms, but they work. And even now here, we are supporting a startup that is following that kind of model. So what am I saying? What I'm saying here is that, like it or not, the rural community, the rural economy will shift towards more digital and more service-oriented, but yet still maintain the kind of agricultural bedrock from which they have relied on for decades. But it creates opportunities for the younger generation. So rural banks should be able to cater to this next generation of customers and not rely on traditional farming or traditional agricultural loans as their sources of funds, or rather for sources of borrowers, but also not rely on government workers and employees and teachers as their bread and butter for lending. Because I would say 10 years down the road, it'll be more service-oriented, more digital economy, and they have to adapt to that market change.
Amazing. We definitely like to see that, and we absolutely enjoy to have leaders like you in the space that is actually driving innovation forward and bring new innovation to the banking space and help to support communities and also bring opportunity to so many young people right now in the Philippines in the term of helping to support all of this digital transition. Jove, it was such an honor to have you on the podcast. I really love to chat with you, and looking forward to see you again, hopefully in the next couple of weeks or months in the Philippines, again face to face. It was a pleasure. And I wish you all the best and a lot of success with GoodBank and GoodTech. And thank you so much for being on this podcast.
Thank you, Jerome. And it's been an honor as well to be a guest on your podcast. I hope that I was able to provide some insights on what's happening outside Manila, what are the opportunities that we see here. Thank you.
Thanks a lot.